9:31 a.m. Pacific Standard Time, 9/15/2013. What do we have before us? We have the S&P 100. That's the top 100 stocks based on market cap. Look, what we have behind us here is the Dow transports that have to lead rallies, as we've said before. They had a great correction and they were shortable using the options. One of the things that we'll take a look at here is on the OEX, that's the Standard & Poor 100, is that, look, when you're overbought, you can only take this side of the market and make a lot of money. And when we hit the major support level, we had a 2-week rally in the transports, and so the other indexes went up as well. The strike prices that we would be looking for here would be a monthly October regular, and we had a closing price. We're above the 10-week and the 20-week now. That's very bullish. However, there's going to be much more volatility for the back half of September and the next couple of weeks and going into October. And they'll be done in time series. So when we get extremely overbought, we only have one choice. The same choices that we had here at the calendar high. And that was that month of August that we said that the transports were failing and they were shortable on the index, and they paid wonderfully. So one of the things that we'll be looking at here is how to trade the 755 put, and I'll just let people see what it looks like. I'll go to a daily. I may not be able to get so they were on sell here, and they don't move a lot, but nonetheless, this is the trade that we're looking at doing here. So because there isn't any, it's overbought. So here are the put options on a daily level from 1250 to 1310. There isn't that much open interest on them. That's why you only have this data right here. So once again, S&P 100 will come up to the neckline, and then we'll look at taking a position there. Once again, the calls work at times and the puts work at times. The transports are going to come up and hit a major neckline. So basically, the transports in the S&P 100 are very, very, very key indexes within the broader Wall Street tape. So, and we already covered the put options for the S&P 500 as well. So one of the other things that we would like to tell our MMTs and our people around the world is that when these things fail and correct, they're going to come back down below these weekly moving averages. Both have gone parabolically up. So that was a great short for August in both of these indexes, and the bull counter rally coming right back up to the next wall of resistance 1 and 2, and we come right back up. But then again, the S&P 100 will follow the S&P 500. So the Dow transports, S&P 100 are they're all three going to correct. And it'll be done in a time series element. Once again, it's been a great 2-week rally for September. September historically can be very volatile, as it will be. There's a lot of headwinds. We got FOMC meeting coming out. We have a lot of headline data coming out. We have Syria. We got declining housing prices. I mean, there's many things on the economic calendar that we're not going to cover in this video, but we just give you a narrative again that in our live training, we're going to cover all of the economic part, all the economic indicators. And listen, all the economists have a 3% return right now. That's not going to happen. It can in the fourth quarter, but the third quarter, the back quarter, is that growth is not 3%. They're wrong. As we get into the fourth quarter, we could possibly see 3% GDP growth. Okay, and so the markets are going to be volatile. There's another correction like we had here. There's going to be a bull pullback, and the bear funds will pay money, and we'll go over those with our training modules on what bear funds would make you the gains